Welcome to another technical analysis webinar with Trevor Neil. My name is Olga, as you can hear, in for Dan. He'll be back next week. As always, we have Trevor Neil. He has over 40 years of experience as a technical analyst and trader, and served as global head of technical analysis at Bloomberg. We'll aim to get through everything in about 30 minutes. As we go along, please ask questions. You can always do that. Go to your GoToWebinar control panel, find the section called Questions. If we have time, I will read out your question to Trevor right here, right now. As always, in a few hours, we will upload a recording of this to our YouTube channel. The handle is FX Choice. You can subscribe, click on the bell, get notified, so whenever we upload a new webinar, you don't miss it. You're welcome to check out Trevor's guide to technical indicators. It's in your GoToWebinar app under Handouts. If you're on YouTube, the link is in the video description. And last thing before we start, we have a new survey. So when we're done today, as you close the GoToWebinar app, a message will pop up suggesting that you take a survey. It's really short. If you have a moment, we'll really appreciate it if you tell us what you think. So that's it from me. Trevor, shall we start? What do we have this week?
Yes, okay, ready to go. Thank you very much, Olga. Welcome. And welcome to everybody else. Thanks for joining us. And yes, please participate in the survey. It will help us a lot. We want to make this as the best possible experience for you, most helpful, beneficial. Okay, before we move into the currencies, I want to have a look at my relative rotation graphs here. This is the G10 currencies. You can see they're all heading southwest against the dollar in the middle here. So what does this mean? Heading south means that they're losing momentum, and heading west means that they are weakening against the dollar. So all of them in different positions are weakening against the dollar and losing upside momentum as well. The weakest is the Swiss franc, remains the weakest, and the Canadian dollar too, and the strongest, the Norwegian crown and the New Zealand dollar there. There's the pound, there's the euro. They're still a little bit slightly outperforming the dollar, but the direction is pretty clear for them. So let's move now to the charts, and as everything is weakening against the dollar, here is the euro weakening against the dollar. So the euro is looking really terrible, continues to look terrible, or I should say the dollar continues to look really strong. It's now approaching this very important support level at 116.62. We've been zigzagging lower here. We failed at 119, and then for the last 2 weeks, we've been coming down. The MACD is negative, the RSI is negative, the ADX is a reading 16, which is quite a low reading, reflecting basically this sideways trading. But what's very alarming is this weekly chart, because it looks really terrible here. We talked about this before, prematurely, as it turned out, that this might be a head and shoulders pattern, left shoulder, head, right shoulder. I drew this neckline in, we hesitated, we broke it, and then we had 2 weeks above it. But now we've come down below it again now, and it's threatening this low here that I mentioned a moment ago at 1662. But look how important this low is. That and final blow, hammer blow for the euro would be the 1602 low. And then, well, honestly, the minimum price objective off the head and shoulders is right down at 111. I mean, it seems staggering to say it, to even utter those words. But, I'm a chartist. I have to say what I see. And head and shoulders are powerful patterns, fairly good reliability. And this seems to be breaking down. It's just this behavior at the neckline was really quite difficult. The pattern in the indicators on the weekly basis are very negative. So watch out here. This could easily start to gather some momentum on the downside. Moving to sterling next. Here's the weekly chart on sterling, and it's a bit flat, really. The MACD is negative, but it's not really negative. It's really flat. The RSI is at 50 on the weekly, so that's a flat reading there. I'm sorry, this is euro. I hit the wrong button there. Sorry. Here. That's the GBP versus the euro, not versus the dollar. I was going to say, why is it flat? It's not flat. It's weak. The pound is weak against the dollar. So here it is. Really, this one was a little bit later, turning down after the euro, which has been going down for 2 weeks here now. The pound has joined the party, if you like. Testing as well, similar support levels in terms of timing. The low here at 136, and then the very important low here at 135.70. And today we're having a really bad day here. The indicators all turned down a lot. The ADX is only reading 13, so this is telling us the market is very flat, but I wouldn't be surprised if that starts to turn up now as maybe the trend starts to strengthen. On the MACD, it's very negative pattern there. And just try and move these out of the way. And the RSI is going down. It's got lower highs pattern in here. We're breaking support. Whether that support is there or there, I'm not quite sure, but it's certainly breaking that level of support. The next level are the two lows at 136.10, and then this little spike low here at 135.70, and then there's very little support until we get down to 133, and so the move to 133 could be quite quick if we break those support levels. So this is again looking ugly and very threatening indeed. The next one I wanted to look at was the Australian dollar and the Canadian dollar, the commodity currencies there. So Australian dollar here is so it's easing back. It's Australian dollar versus the US dollar. So this going down is the US dollar rising. So we've had 2 weeks of falling here, having been rebuffed at 174.50. Now testing heading towards important lows at 71.04. 71 we'll call it. The MACD is negative. The RSI is negative. The ADX is at 18. There, and here's the weekly chart, and it's coming down towards that support levels that I talked about. But I look left on this one. This one is not above significant historic support. This is from the third quarter of 2020. It's quite substantial here. So I would say that this one will probably lose its downside momentum before the other ones do. Looking at the RRG again, you see this one compared to the Canadian dollar, which is much more over here, already underperforming the dollar itself. This is just weakening against the dollar, and that's, I think, because it's approaching this support level here. Whereas the Canadian dollar, and don't forget this is quoted the other way up, so this here is a weakening Canadian dollar as the US dollar rises. So we're moving up here. We've got a higher lows pattern intact. The MACD is positive, the RSI is positive, and we're heading towards this resistance here at the high here of 129.48. Got some very historic support at 130 here, quite strong support there, and that might be enough to stifle this, but this one does look as though it's got more to go before it slows down. So of the two commodity currencies, the Canadian dollar and the Australian dollar, the Canadian dollar is the preferable one to short versus the US dollar. Now, if you have any questions at all, anything that I've missed, I'm going to move on to the cryptos now. But if there's any currencies that you think I should have covered, I can go back to them. I don't mind at all. Now, again, we're going to have a look at the RRG, relative rotation graph of the cryptos. Here's the US dollar here. So everything is west of it and south of it. Now, west means it's weaker. The weakest is Bitcoin, then Litecoin, and then Ethereum. This is updated till Friday here. And then being below 100 on the horizontal axis means without positive momentum. It's slightly improving, but it's still, they're poor. So basically, they're poor is the answer versus the US dollar. So let's have a look at the poor charts here. And we see here that Bitcoin is on the weekly chart here has turned over and it's weak. The MACD is still positive currently. The RSI is easing back, but the daily chart is looking quite threatening. We've come down here to some very important levels, series of lows which are not in themselves that strong. That's what's quite worrying about this. And so a break of these lows around 42,800 here, I think would be relatively easy for the market to do, and then it could tumble really through the 40,000 level, that big round number support, and then I think it picks up support here at 38,000, but that's not that strong. Really, the support comes in at 36,000 down here. So this is a very worrying pattern here. High, higher high, lower high. It looks, you know, worrying. Ethereum, also worrying, similar sort of pattern, but closer to its threatening point. Here, that is the round number of 3,000. 3,000 is a big number for this, and we're moving quite purposely towards it, and all the indicators are very negative. And look how vulnerable this is. You know, compared to Bitcoin. Bitcoin, if we break down, we get support here and we get support here. In Ethereum, we moved up so fast in this period here that we don't meet support until $600 later. Down here, 2,400 is where it begins to pick up support. And so if we do break that 3,000 level, I think that the fall will be fast and vicious if it breaks that. It is support, it hasn't broken yet, so I don't want to say it's going to break, but that will give us also the head and shoulders here, shoulder, head, shoulder. We measure from the neckline, this will be the neckline to the head, and that takes us well down into here, down to about 2,000. You know, so there's some ugly technicals developing here, but the crucial thing is the breaking of the 3,000 level, which hasn't happened yet, but they're all looking weak, aren't they? Well, we've got another pattern here. Could be shoulder, head, shoulder pattern here, looking pretty threatening. The big level here is 162 sort of area, and we really touched that already this morning, tested it, and so far it's a little bit bounced from it. But this is very threatening. Little bit of support at 140, and it builds up from 140 down to 120 there. So the biggest potential is in Ethereum, I think, for a violent fall. So the fall will be felt most in Ethereum if it develops, but they've all got triggers, they're all close together, and they're all close to them, and so you know, we're either going to hold here or we're going to break, and if we break, these are big head and shoulders with big implications, led, I think, by Ethereum. Okay, anybody got any questions so far, or shall I press on, Olga?
Well, we have a request to cover gold, which I suspect you were going to do anyway. Okay, that's cool. Okay.
Okay, well, you know, I've not been a friend to gold. Let's look at, first of all, the gold-silver ratio before we look at gold and silver, because big things are happening here. This is gold divided by silver. Rising price here, rising ratio here means that gold is outperforming silver. And look how this has really made this enormous bottom here. Silver had that outperformance for half a year, really, and now it's changed during the summer, and now it's breaking up and potentially breaking up a lot more. So the action will be in gold if there is action, but it's a case, unfortunately, of which is least bad, I think. But from a technical point of view, we've just broken that high, which is constructed in the ratio. But let's look at gold itself. Gold itself not looking good at all, is it? It's looking heavy. It's got a lot of resistance above it, above 1780, all the way up to 1840 level here. 1840, if we were to break that, the thing would soar. But there's such a lot of resistance in there. It's very, very difficult, and it looks much more threatening now to retackle this spike low that we had back in August down at 1684. Then the next support below that we see on the weekly chart is 1750. I mean, it's looking pretty threatening this market and looking pretty weak and not doing its job as a sort of a hedge against inflation. Or if inflation concerns are increasing at the moment, but we've got this strong dollar which does weigh on it. It's not looking good at all. And silver, well, you know, the ratio told us it all. It's looking worse. It has broken its equivalent low. This is the equivalent of that spike low, that August low in gold. It was broken on Friday, and we're trading now below it. So we've got a very clear downward pattern here. Let's just see how bad it looks on the weekly. Here it is on the weekly chart. Here we'll pull back more than 38.2% now. We have got support at 22 and just below 22, but I'm very, very worried if that gives way, we don't pick up any support until below, well, $18.50 down here. And this move here from here to here is just very vulnerable, could be fast, that move there. So the play, the gold silver play, I think is the gold's in preference to silver, but neither of them look very good, and silver looks worse. I'm sorry, that's probably not what you wanted to hear, but that's how it looks at the moment. And you know, when the tension in the world and with the inflation and with bond yields still comparatively low, I think that you know, gold should be doing a lot better than it is. When it doesn't do well, when, if you like, the fundamentals are on its side, then it's a very, very weak technical situation. Moving now to Brent crude oil. Now, Brent crude oil, I really do think this is getting ready to do something big. I want to just bring in more data here to show you why this is also important. Let's go to a monthly chart here, and I will bring in some more data. Now look at this. You see, we've come up towards testing this sort of resistance level between 75 and 80. I know it's $10, that's a lot. But if we break through that, then we're coming back to this big triangle, symmetrical triangle, which dominated the market for 4 years. Massive resistance level, but that's back up, you know, above 100 there. So the move up, you know, down, if you remember, was so fast. The move up could be very fast on that. We're testing this high here, which is the 2019 high. If we break that, we'll be challenging the 2018 high. If we break that, I think we'll be going back above the other side of 100. So, you know, there are significant hurdles to cross, but we do look like we, you know, that this is going to be the next big exciting thing, because one of two things is going to happen. It's going to make those breaks, or it's going to fail. And you know, look how vicious this was the last time it failed here. It went down, it went from 80, 75 bucks down to 20 bucks, below 20 bucks. You know, wow. So it's possible that it can do that kind of thing. So it's going to do one of those two things. On balance, I think technically it looks more like breaking up than down. You know, the intermediate term pattern is reasonably good at this stage, but it's a tough. There's two tough hurdles. We haven't got much power, as the ADX tells us, only 12 reading here. The RSI has turned down just on this couple of last sessions here at the resistance from July, and the MACD, which are lagging indicator, is still positive there. So I just want to draw your attention to this. I think there's a big thing about to happen over the next few weeks. Here, the autumn move probably will be centered on energy. And on balance, just about, I'm more bullish than bearish, but I'm absolutely open-minded to this being to the downside. Elsewhere in the complex, in the distillates and the gas and electricity, in fact, these things have absolutely soared. It's there's a perfect storm here, really, in terms of the fundamentals and the rush into wind power and solar has really been proving costly when you get summer, which has been predominantly grey and unusually little wind there, which is leaving shortages. So the tail is wagging the dog a little bit here, because Brent is is I think getting steady because of the other things. Coal, also coal, we hate coal, it's supposed to disappear, isn't it? And yet is that the price is soaring, and they're opening up coal mines here in the UK, because we have to, otherwise we're going to run out of power. Moving to the stock indices now. Big changes here in the technicals. It was rather tediously bullish, not tediously bullish if you were long, nothing tedious about making money. But here's the weekly MACD on the US 500. It's been bullish, it still is bullish on the weekly, and we've only got this one black candle. It's the first one we've had for months here. So nothing to say it's the end of the world here. We just haven't gone up. I suppose that's it there. And this remains looking, relatively good. Higher lows pattern. It can definitely recover from this, and this may be a pause and a correction and a buy opportunity there. Looking at the tech 100 here, the weekly pattern is also still bullish, and I would therefore consider this still looking good. In the daily chart, we've eased off a little bit, and the MACD has crossed down, but it's again also looking like it might be beginning to stabilize and continue the pattern of higher lows. So watch out for opportunities in these two in particular for a resumption of the uptrend. We're not that far away from the highs. I wouldn't be surprised. I'm saying here we are again at new all-time highs, and I hope you caught the dip to buy. And it does seem like a kind of a weak dip that's not going to materialize into anything too significant. But moving to the UK 100, well, that's not at all the same at all. This is, that I've always had a big problem with this market, and it has just been pulled up by the other things, and it seems to be very reluctant. This is looking exceedingly threatening here now. Let me just show you the big picture on this and why I am so worried. I have been so negative about this market. That's good. 10 years of data in there. Oh, 10 years, not enough. 20 years of data. Okay, so what we're faced with, 10 years would have been enough, is from 2017 to 2020, we consolidated in a range here. That is above us, that is resistance. That is a big, huge amount of resistance for the market. And we went to it, 7,200 was where we identified it, and we've turned down from it. It's been rebuffed by that. And I think that's really, it's going to be so difficult. The FTSE is not in blue sky like the US stock market. It's just got a big concrete ceiling above it there. It's going to be very hard. This is going to lag. If the rest of the world goes up, this is going to be the worst performer. It's actually, even in the short term, very threatening here now, because it could take out this low here from July at 6,813, in fact. And, if it does that, that'll be breaking this low here, and this will put then these levels around here, around 6,500 and 50% retracements as likely candidates. This, if it wasn't a stock index, and no stock index being so highly correlated, this would be a very, very bearish looking chart. It's just that it'd be hard to go down if everything else is not going down. But Germany is just gapped lower here, also looking like testing its July low. This was a bit of a bright spot really, but now all this area here from second part of August till last week is now resistance, consolidation resistance here, and the chart has now deteriorated a lot here. So look here, we've got this very big black candle here. It's only one black candle, but it's a big deterioration in the technical picture. It must hold this low here of 15,050. If it doesn't hold that, then we're in serious trouble here. It's like a different world to the US stock market. Here is something also in a different world, which is the Japan index, something that many of you know that ever since I started doing these presentations. How long has it been now? Must be nearly a year that we've been doing it. This has been my favorite market, and the reason being is, and I have to bring in a long chart into here, is that the potential on the upside is enormous. So this is the all-time high made back in the 1980s. Well, we're testing this high here now. I'll come back to show you that more clearly. So we're testing the 1990s levels in this market. We've been going up all the time I've been talking. We've been going up. Now we broke out of an enormous flag formation. Here it is on the weekly chart. And so that lasted for 3 months nearly, that weekly chart, pattern, but it is a bullish pattern. You know, that's a drifting pattern, it's a bullish pattern. We measure the length of the flag pole as chartists from here to here and then project up to there. That's what I've done for this. That would take us to 34,700. Not to say that's the end of it, but that's what's implied by this breakout here. So there's the flag in here. Here's the breakout, and looking like there's another 4,000 on the upside for this one here. This looks great, this one here, and you know, I'd rather be in this than in the US stock market, which is you know, it's gone up for too long, really. This is really a recovery trade. This is not in new highs. This is recovering, and it's been much higher than this, and so it really looks as though it's got more to go, this one, I would say. Okay, now, do we have any questions at all?
No, Trevor, not yet, not for now.
Okay. Okay, if you've got any questions, please put them in the chat box. Anything that you'd like me to cover that I haven't covered. There's normally somebody on here who always asks me for the Australian dollar, Japanese yen. So let me do that for that person. Maybe he's not here today, but you know, we worried about this. The weekly chart turned over. The RSI had come down through 65 from above. The MACD started to narrow. It started to move down again. This is the Australian dollar underperforming the Japanese yen. Japanese yen, you know, is very highly correlated with the US dollar. So this is really almost a very similar trade to the Australian dollar versus the US dollar. And this is looking, you know, having failed at resistance, the indicators turning negative, we're looking like we're testing the 78 level and continue to deteriorate in this one. All right, Olga, do we have any questions? No? Not? They've had their chance?
No, I think that's it. Do you want to cover anything else, or shall we be done for today?
No, let's go for it. Let's remind everybody, of course, about the poll.
Yes, absolutely, everyone. Please, it will help us so much if you tell us your feedback and everything, and whatever other ideas about how we can improve the webinar. That will help enormously. That will, the message to take the survey will pop up once you close the app, the GoToWebinar app today. So in a few minutes, it will just take you to the page with the questions.
And please do take a moment to do that. It does help us a lot. I know everybody gets bombarded with, oh, can you help us with the poll and things, but you know, we all at FX Choice want to give you what you want. So without really being told what you want, what am I not doing right? Am I talking too long term, too short term? Am I covering the wrong things? Do I rabbit on too long? You know, whatever you like. I will not take offense. You know, so I want to do it better. So tell me what's better in your view. Okay.
Yes.
Thanks very much, Olga, and thanks everybody for joining us today.
Yes, thank you, Trevor. And if I can just remind everyone also that if you ever missed an instrument that you wanted Trevor to cover, or you just missed the whole webinar, you can always go to our YouTube channel. You can search for FX Choice and it will be there. And a recording of Trevor's webinar will be there as well. So don't forget to subscribe, to watch webinars on YouTube if you ever miss them. And that's it. Thank you everyone for joining us, and happy trading this week.
Yes, have a great week, and may the trend be with you.
Yes.
Bye-bye all.
Okay, bye-bye, everyone.
Bye-bye.